Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for October 30th, 2018. And we're talking earnings. Lots of big earnings, mainly Facebook, and some sympathy with Amazon after its earnings. Let's take a look in tonight's video with respect to the expected moves, what's already happening. Hint, hint, it's wild, and we'll probably keep seeing wild volatility in Facebook, and we'll set up tomorrow's trading session. First, let's start with the earnings announcement in Facebook. Now, as I do this live, I know they were a little bit light on revenue, but I certainly haven't read the whole earnings announcement. We'll have time to do that later this evening and before tomorrow's open. But just talking about price levels, we always look at earnings in terms of expected movement and option volatility. That gives us clues as to where the price might land and trade away from. Good example before we start talking about these is Netflix, because this was a video a couple of weeks ago that Netflix had an expected move for earnings up right into 380. And once we got that on the open, Netflix actually traded down away from it, giving us a couple of chances to go short and even position further on a departure from the expected move. So Facebook, keep that same logic in mind. How do we do this? We take a look at the near-term option, and we look at the implied volatility, 110%. But mainly, it's not that what we're concerned about. We're concerned with the price level. So how that translates into near-term price movement. We also see this maybe in terms of the cone of expiration and the like. But this is specifically to our options and earnings and expected move. So that's mainly how the logic is approached. So $13, $12.88 up or down. So if we're looking just at Facebook, the current price is, this makes it simple, $146 per share. We're going to add 13 to that, takes us to 158, which is right here on the price chart, roughly 158. That's just shy of our 160 pivot. And then we take the current price again, roughly 146, take $13 away from it. And then we're looking at, we actually have to scroll our chart for this one, 133, roughly 133. So that just says, based on option premium and expected movement and option statistics, we could see a $13 move up or down. What's happening right now? I actually jump into the 1 minute time frame. Can we believe we're seeing just about both, where the market jumped up, plunged down, and now is, believe it or not, roughly where it closed. Now that probably won't be the case into Wednesday's session. So as we continue to watch this together and after the video, just look at where Facebook winds up before market open. And that should give us a clue if it's into its 158, 133, or right in the middle of those, which means nothing really happened. No really trade if nothing happens. Next up is eBay. Now, eBay might not be a stock that we trade, but it might just be fun to watch. It is into this spot marker level zone at about 26.50. It is trending down. It has gapped down, but could rally and could bounce. Right now, unfortunately for the stock, looks like it's pushing lower after its earnings. And the same thing, its 3-day expected move is roughly 124% implied volatility, or 2.75 points up or down. And that takes us to about 30 per share if we gap and go to the upside. And doesn't look likely as of this moment, or 25. 25, and right now it is opening just roughly at the 27 per share level. So keep those in mind whether or not we trade eBay. Baidu is one that we talk about and some of us trade. So Baidu is going to close just above the 180 per share in a downtrend. But what's its expected move? Same thing, 100% implied volatility, $15 up or down. And where does that leave us with Baidu? 15 up, 198, 15, which is roughly here, 15 down. Again, we have to scroll for this one, but believe it or not, it's going to be about 168 down at these levels. Where is it at the moment? 185, and that's not quite the expected move. But nonetheless, again, we have plenty of time to go, and we know that Baidu can be volatile overnight. So watch these pivots, watch these earnings, and of course, if you are going to trade these, it will be helpful to get a sense at least of headline news of whether the company missed either a revenue forecast, expectations, or gave guidance to the future. Guidance is in, yeah, this quarter was good, but the next quarter will not be good. That may send a stock plunging on better than expected earnings right now, because guidance, it's important about the future. Electronic Arts, ooh, that's some volatility. So Electronic Arts is pushing up away from the 90 per share level. Fell under 100. It also is downtrending. Its expected movement, 118 implied volatility, $9 up or down. So the math on that just quickly is, roughly speaking, off of 94, takes us to 104, roughly speaking again. And that's about the 20-day moving average. Doesn't look like that's going to happen. So from that, $9 away from roughly 94 is about $86. Still have to scan to get that one. And oh no, oh dear, that's exactly where the share prices plunged initially, 86 on the dot, pushed away from it, and now appears to be headed back. You could get an EA play if this sells off toward 86 and then departs, as it just did, and departs away from it. So 86 is your Electronic Arts key level. One more. AMGN. AMGN's going to push off its 200-day simple moving average in terms of swing trading. It is in a flat trend, flat through most of 2018 at least. Its earnings, where is that? 54%. So taking a look at that play, 8 up or down. Notice that AMGN does not quite have the same volatility profile. Nonetheless, you're getting earnings and plays from AMGN. So it takes us roughly to 8 up, 197 up here. Not quite on the open. And beneath that, take it away, takes us to 181, which is the spike low. So AMGN shall be playing off of these levels as we play into Wednesday's session. Some companies have already had earnings today. Under Armour, UAA, is one of them. And it, as you can see, broke a downtrend, broke support, or I guess held support at 18 per share, and now sent share prices surging. We are not necessarily looking at the close right now, but this is our after market hours, or sorry, before market hours, right? Some earnings took place, propelled the stock higher, earnings call, earnings per share, and that resulted in a trend day to the upside. A trend day to the upside. So buying the pullbacks as the market departs, gaps and goes. Gaps and goes. And finally, we'll take a look at the MasterCard. Two more, really. A MasterCard pushed lower, broke support. This is our pre-market activity on the earnings, gap down, and actually trended to the downside, stabilizing at about 184.50 per share. The interesting one, the one that gives us nightmares or gives our account higher values if we're shorting this one, is General Electric, GE. It has remained weak. The concept that we use is that which is weak now tends to get weaker in the future. It looked like there was some life to this downtrending company with some bounces up, higher volume, but that ultimately was not the case. GE had earnings. GE pushed lower a little bit in the pre-market. We can see that take place. A little bit of a push off the open, but otherwise it was one of the weakest stocks in the S&P today. General Electric down about 8, almost 9%. Either way, whatever stocks, any one or all of these, take a look at them as they report. As the volatility winds up, trails off overnight, picks back up again in the morning, and look to play any type of departure or adjust positions as needed. Take care of TheoTrade. This is Corey Rosenblum with the Theo Nightly Video for October 30th, 2018.